Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohanar Pingle, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to our video series GST Relearn. Yes, and today is part 8 and we are going to discuss registration under GST. Yes, so let me allow to share my screen. Registration under GST. Let's see what we are going to learn today. Introduction, concept and importance of registration, persons liable for registration, persons not liable for registration, compulsory registration, exemptions from registration, time limit for registration, procedure for registration, Aadhaar authentication and biometric verification, special cases of registration like CTP, NRTP, multiple registrations, amendment, cancellation, and suspension of registration, key compliance point, also latest updates 2024-25, and after all, we will see conclusions from today's learning. So let's start with it. GST registration is not merely a procedural requirement, but a legal identity under GST. What is it? It is not merely a procedural requirement, but a legal identity under GST. It gives a legal identity to you. It enables tax collection, ITC availment, and compliance within the GST framework. First, it is not a procedural requirement. It is a legal identity under GST. Then it enables what? Tax collection, ITC availment, and compliance within the GST framework, ensuring transparency, traceability, and accountability in the indirect tax system. What are the statutory provisions? Statutory provisions are sections 22 to section 30 of CGST Act 2017 deals with registration, and also rules 8 to rules 26 of CGST rules 2017 also deals with registration under GST. Then recent updates, we will going to see Aadhaar based authentication, biometric verification for high risk cases. First, now we will see section 22, persons liable for registrations. Thereunder is threshold limit. Normal category states goods rupees 40 lakhs and services rupees 20 lakhs. Means up to this, we not required to register, but state which are covered under normal category, and if the dealer who's dealing in goods whose turnover exceeds rupees 40 lakhs, then he is required to mandatory register under GST under section 22. Means this section 22 is talks about the person who are liable for registration. And also a dealer who is dealing in services or who is providing services, threshold limit is rupees 20 lakhs. Up to that, we don't have to register. But once you cross the limit of rupees 20 lakhs in case of service dealer, then you have to register under GST Act. Then special category states, those states who are covered under special category, we will see both list of states. So first understand what is the threshold limit for normal category state and what is the threshold limit for special category state. Special category states exactly the half of limit for normal category state. So goods having turnover rupees 20 lakhs, up to that you don't have to register. Once it is exceed, then you have to register. And in case of services, rupees 10 lakh is the threshold limit. Up to that you don't have to register, but once it is crosses rupees 10 lakh limit, you have to register under GST. So normal category states and special category states. If you are academic, how you will remember that normal category state, whatever it is the limit, exactly half of that, that is 50% of it, is required for special category states. So 40 lakhs goods, 20 lakhs services under normal category, and in case of special category states, goods rupees 20 lakhs and rupees 10 lakh for services is threshold limit. Hope you are understanding. Aggregate turnover includes taxable, exempt, export, all types of supply, but exclude what? GST and sales. Aggregate turnover includes everything, means the threshold limit is based on that aggregate turnover, and we need to know this aggregate turnover, how we can arrive at aggregate turnover. So it includes taxable, exempt, exports, interstate supplies, but excludes GST and sales. Let's see example. Mr. A in Delhi sells goods worth rupees 38 lakhs and exempt goods worth rupees 5 lakhs. Aggregate turnover is what includes taxable as well as exempt. So aggregate turnover will be 38 lakhs plus 5 lakhs equal to 43 lakhs. So exceeds 40 lakhs. Delhi covered under normal state category. Then it exceeds 40 lakhs and registration required. Now we will see normal category states covered under normal category, that is threshold limit of rupees goods for 40 lakhs and services 20 lakhs. What are the states? You can take screenshot of it if you want. Okay, states under normal category: Andhra Pradesh, Arunachal Pradesh, Assam, Bihar, Chhattisgarh, Goa, Gujarat, Haryana, Jharkhand, Karnataka, Kerala, मध्य प्रदेश, महाराष्ट्र, उड़ीसा, पंजाब, राजस्थान, तमिलनाडु, तेलंगाना, उत्तर प्रदेश, Uttarakhand, and West Bengal. Union territories also covered under normal category, and that are Andaman and Nicobar Island, Chandigarh, Dadra and Nagar Haveli, and Daman and Diu, Delhi, Lakshadweep, and Pondicherry. And special category states where threshold limit for goods is 20 lakhs and for services it is 10 lakhs as per Article 279A, sub Article 4, Clause G, read with GST law. Special category states are northern eastern states are Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, and hilly state Himachal Pradesh. Other special category Uttarakhand. Let's see what is the note point here is earlier Jammu and Kashmir was included, but after reorganization, Union territories of Jammu and Kashmir and Ladakh follow normal category rules. Some states like Assam and Arunachal Pradesh opted for higher threshold of rupees 40 lakhs for goods. So practical application depends on notification, and therefore they are covered under special category. If you see, you have listed Uttarakhand under normal or also special category. They are, as per rules, they are covered under special category, but they on their own opted, means Assam, Arunachal Pradesh opted for what? Higher threshold, that is rupees 40 lakhs for goods. So practical application depends on that notification because they are uh, covered under normal as they have opted that option. Next, section 23. Now, section 22, we see persons liable for registration. Now, section 23 talks about persons not liable for registration. Exclusively exempt supply, agriculturist, that is produce out of cultivation, and notified persons are under persons not liable for registration. Section 23 talks about persons not liable for registration, and they are exclusively exempt supply, agriculturist, that is produce out of cultivation, notified persons. Example, farmers selling wheat worth rupees 50 lakhs, no registration required. Agriculture produce is exempt and that is produced out of cultivation. Section 24. Section 24 talks about compulsory registration. What may it? So section 24, who are the persons who are compulsory registered required? Irrespective of threshold, interstate supply of goods, casual, non-resident taxable person, reverse charge supplier, agent supplying goods on behalf of others, e-commerce operators, input service distributor, OIDR services provider from outside India, person supplying online money gaming from outside India. Irrespective of threshold, these are required compulsory registration under section 24. That is interstate supply of goods. Whenever you supply goods interstate, that is between the two states, that if Maharashtra and Gujarat involved, then it is an interstate supply and you have to compulsory register. Then casual or non-resident taxable persons are also required to register compulsory. Reverse charge suppliers, agents supplying goods on behalf of others, that is agent principal relationship. E-commerce operator also covered under compulsory registration. Then input service distributors, that is ISD. Then OIDR service provider from outside India. Person supplying online money gaming from outside India. This is covered recently. Person supplying online money gaming from outside India also required to compulsory register. Let's see example. XYZ Private Limited in Maharashtra supplies goods worth rupees 1 lakh to Gujarat. It is below threshold limit. Interstate supply. Okay. Must register even if below rupees 40 lakhs. That is the important thing. Next, exemptions from registration under notifications. Let's see what are the exemptions. So we have not required to register. Interstate supply of services up to rupees 20 lakhs exempt. Interstate supply of goods, no threshold limit, it has to be registered. But interstate supply of services up to rupees 20 lakhs are exempted. Means even though that supply is interstate, means you are a service provider from Maharashtra providing service in Gujarat state, then if your turnover is within rupees 20 lakhs, then you don't have to register. It is exempted even though you are interstate supplier. Okay, be clear. I think it is very much easy. We have seen that interstate supply of goods is required to compulsory register, but interstate supply of services threshold limit is 20 lakhs. Up to that, you are exempted. Then handicraft goods exemption for interstate supply. Handicraft goods exemption for interstate supply means even though you are interstate supplying goods of handicraft goods, then you don't have to register. Then persons making only RCM supplies, reverse charge mechanism means persons making the supplies which are covered under RCM, then it would be not required to register. They are exempt, like advocates. Example, Mr. B in Rajasthan provides, let's see, legal services. Just I have said, Mr. B in Rajasthan provides legal services covered under RCM of rupees 50 lakhs, no registration required because recipient pays tax under RCM. Hope you are very clear up to this. Now we are moving onwards to time limit to apply for registration. Means when we have to apply. Normal taxpayers require to apply 30 days from becoming liable. Means whenever you are become liable as per relevant section or rules, within 30 days from become you are liable, you have to apply for registration. And for casual and non-resident, 5 days prior to commencement. Normal taxpayer has to apply within 30 days from becoming liable, and casual and non-resident are required to 5 days prior to the commencement. Example, Mr. C crosses 40 lakhs turnover on 10th June, must apply by 10th of July, that is within 30 days from become liable. Means it crosses the turnover on the date on which it is liable, but from that date you have to add up 30 days, and within that period of 30 days time limit, you have to apply for registration. So Mr. C crosses 40 lakhs turnover on 10th June, he is liable to be registered. Then within 30 days will be up to 10 July, he must apply for registration. Next, procedure for registration. Once you know how or when you are liable to register, then we need to, what documents we need to as a supporting we need to upload on the portal or required. So procedure for registration, section 25 talks about that procedure and rules 8 to rule 26 covers that procedure. So part A will be PAN mobile email on GST portal. Temporary reference number will be created and sent to you. Then part B, we need to fill the details, upload the documents. Means first we are based on the PAN mobile email temporary reference number created. They send us to that on the bad basis temporary reference number, that is TRN. We next move to the part B and we need to fill up the details and upload the documents. And then we need to do Aadhaar authentication, that is OTP based or biometric also. Then grant of registration in form GST Reg 06 form by the department. Let's see example. ABC Traders applies on 5th of July with Aadhaar authentication. Registration approved in 3 working days without physical verification. Earlier era in the sense in the initial stage of GST, we at least minimum 15 days required to get the certificate. But now it's within means your application is clear up to date within a 3 working days, you get the registration certificate on your email ID. So it is the very much quick service now. So within 3 days of working days, you get the certificate. And that is also without physical verification. What is meant by Aadhaar authentication? Let's see or understand what is Aadhaar authentication. Section 25, subsection 6A to 6D covers this part, Aadhaar authentication. Mandatory for new applicants. That is the old, they have not compulsory at that time. But nowadays, from you, if you are applying now, then this Aadhaar authentication is mandatory. So it is mandatory for new applicants prospectively. Biometric authentication for high risk cases means like some of the assessee that a common supplier who supplies and deals with a minimum not required biometric authentication, but very high risk cases. They are like big companies they require, they are on a high risk if their data stolen from in any case, in case of IT breach, then it will be a very tough to recover whatever, and we can lose very important data. So the biometric authentication is good for them, those who are dealing in high risk cases. Failure will be physical verification of business experience. If you are not able to do other authentication within the time permits, then it will be department will carry physical verification of business premises. Example, if Aadhaar authentication fails for Mr. D's application, officer may visit the premises for verification. So it is very important. You able to apply, but if Aadhaar authentication is not done within the date, then the officer will visit your premises for verification. So keep in understand, we keep in this mind. Now we will move to special cases. Yes. What are the assessee or dealers covered under special cases? That is casual taxable person, non-resident taxable person, and multiple registrations cases are covered under special cases. Casual taxable person, no fixed place advance tax deposit. Means they are the casual season, like casual taxable person, the person dealing in a season products or season services. So he will be just registered for that particular project or for particular thing. And even means that is why it has no fixed place of business and they have to deposit the tax in advance. Non-resident taxable person, registration valid for 90 days and that can be extendable on the request. So for non-resident, registration valid for only 90 days. Multiple registrations, different states mandatory, same state optional for separate business verticals. In case of multiple registrations, different states mandatory and same state optional for separate business verticals. Let's see example. Event organizer from Mumbai holds an exhibition in Chennai, must register as casual taxable person in Tamil Nadu and deposit estimated tax upfront. Means that event is for, I think, for some days, few days, or for a month. So that organizer, he's already registered in Mumbai, Maharashtra, but for that exhibition is holding in Chennai, and for that few days, you don't have to require to register in Chennai, that is in Tamil Nadu, or that say for that purpose, he has to register as a casual taxable person. There is no fixed place, and advance tax need to be deposited in that case. So that event organization must register as CTP in Tamil Nadu and deposit the estimated tax upfront. This is the practical, so that is why I covered the example too to understand the concept. Next, amendment, cancellation, and suspension, how it takes place. Amendment. Inform changes in core fields within 15 days. Means if you want to amend anything and that is related to core fields like address, that is place of business, or anything related to a core field, you have to inform it within 15 days to department or on the portal. You have to update it. Cancellation on closure, transfer, or fraud. When it happens on closure, if you have transfer your business, or in case of fraud, cancellation happen. And in case of and suspension when happens during cancellation proceedings, the department may suspend your activity for time being. Let's see example. If XYZ Limited changes address, that is a core field of its principal place of business, must apply for amendment within 15 days. That is the case of, that is change addressable. That is the core field, and that core field change required to be updated within 50 days, or required to inform within 15 days. Key compliance points. What are they? Display GSTN at premises. If you are a registered dealer, means once you register dealer, you are providing goods, you are manufacturing goods, or you are supplying, like you are supplying goods, or you are supplying services on your place of business, registered place of business, you have to display your GSTN number prominently. Revised invoice for supplies between effective date and registration certificate issuance within 1 month. Means what? If you're liable to register within 30 days, liable to register on 1st August, and you have within 30 days you have registered, but in between that, means you got the registration certificates with effect from 15th August or 16th August, and within 1 to 15 days if you have issued few of the invoices, and in the certificate you are getting the registration from 1st August, effective from 1st August, then that invoices issued between that period 1st to 15 August, you have to revise and reissued with as a tax invoice to the any your customer. So revised invoices for supplies between the effective date and registration certificate issuance within 1 month. Correct HSN or SAC details are very important. You have to code this HSN and SAC details very correctly and very perfectly. Example, Mr. E becomes liable on 1st July, gets GSTN on 20th July, can issue revised invoices for supplies made from 1st July to 20th July by 20th August. That is what I have taken example orally of the period 1st to 15th August. Here they have said 1st July liable. He got Mr. E got GSTN on 20th July. So between that period, 1st July to 20th July, whatever invoices are issued, we need to revise it and issued by 20th August. And now we will see latest updates taken place 2024-25. Notification number 12 2024 Central Tax 10 July 2024 is about biometric verification in risky applications, risk-based scrutiny using data analytics, GARM, that is DGARM, and auto approval system tightened to curb fake registrations. Auto approval systems tightened to curb the fake registration. These are the recent updates. Example, if an applicant shows a high risk profile, example, multiple registrations at same address, biometric and physical verification will be mandatory. Means this is what the biometric is. Means not from the our angle, that is a supplier, but from the department angle, if they think it is a high risk profile, then they mandate you to take a step forward and use biometric and physical verification also taken by the department. That is a mandatory in that case. So now we are at the end of our videos. Today's part 8, GST registration under GST. We will see what are the conclusions that can be drawn from today's learning, or we can say takeaways from today's learning. What are they? Registration is the gateway to GST compliance. Without obtaining a GST registration, a person cannot collect tax or avail input tax credit, making it the foundational step for every business crossing the threshold or falling under compulsory registration. Threshold based and activity based criteria. While turnover determines liability for the most businesses, certain activities like interstate supply of goods, e-commerce operations, and import of services mandate registration regardless of turnover. But even the interstate supply of services, there is a threshold limit of 20 lakhs. Even though you are interstate supply, you don't have to mandatorily register. Keep in this mind. Aadhaar and biometric authentication. Recent amendments emphasize authentication and risk-based verification to prevent fake registrations and ITC frauds, showing a shift towards the data-driven compliance. That is the reason why Aadhaar and biometric authentication is now going upwards, using the maximum use of this Aadhaar and biometric authentication to safeguard ourselves also. Separate registration for each state. GST is a destination-based tax, so businesses operating in multiple states require multiple registrations, making compliance decentralized at the state level. But like we have seen that example, a event organizer in Mumbai organizing event in Chennai don't have to apply there. He applied as a casual taxable person for some period of time. Special categories like CTP, casual taxable persons, and non-resident taxable persons have strict conditions. Advance tax payment and validity restrictions ensure revenue protection for temporary and foreign suppliers. Dynamic law with continuous changes. Frequent amendments like biometric authentication and enhanced scrutiny reflect the evolving nature of GST law and the government's focus on curbing the evasion. And that is the steps taken by the government, that is from Aadhaar to the biometric authentication. It is now just for a high risk profiles they have made mandatory, that is biometric, but I think from now onwards it will be automatically also mandatory from Aadhaar to biometric authentication for everyone. So it is a curbing evasion, we can say. So that's it for today. We have learned today registration under GST, and we are under module 2, cover ITC and then now registration. So stay tuned with the Tax Guru YouTube channel. If you are not yet subscribed, then do subscribe and share this video in your network. That is a GST Relearn video series I'm talking about. This is for everyone from basic to advanced. We are learning. So it is very much useful for your day-to-day activities. Those who are accountants, academics, that is, at least they will understand basic of it. So stay tuned. Hope you are all fine and we will meet soon in next video. Thank you so much for patient hearing. Hare Krishna.